Thank you very much, and it's a pleasure to be here and to be here for such a wide crowd. So indeed, happy to do not this live reveal, but a relayed reveal because we announced this on Thursday that last week in Amsterdam, in Biella, in Brussels, in Copenhagen, in Frankfurt, in Milan, in Stockholm, in Valencia, and in Vienna, shareholders or board members of 9 different banks in 8 different countries signed a shareholder agreement to set up a new e-money institute to issue a European stablecoin. The goal of the European stablecoin is to facilitate innovation on blockchain, to facilitate innovation by banks, but to facilitate innovation that is taking place in industries, by various companies, by consortiums like the Camino network. We started this 3 years ago in Amsterdam. A colleague of mine, together with me, we received the green light of the board to explore this, and it is now our aim to go live with our Euro stablecoin in the second half of 2026. Because we still need to get our license, etc. But we already set up the entity with the whole management. Introducing myself, so I'm Lebbe. I'm already it's now my 9th year that I work in digital assets as digital asset lead within ING. And I'm the co-product owner of the European stablecoin, and I'm leading the tech stream there. Now, European banks joined forces to make Europe innovative again. Why did we see the need to provide a Euro stablecoin towards the industry? Because we are very much aware that blockchain can solve inefficiencies. The various banks have already done a lot of projects in it, and we see that not only in the financial markets, in the financial industry, but also in other industries, that there are a lot of inefficiencies that can be solved with blockchain. Zooming in a little bit towards the payment industry and towards what we are good at, is that currently our systems are not that bad from a European perspective, but definitely if you move cross-border, then payments are slow. We talked about when you do a cross-border payment from Europe to Asia, it takes 1 to 3 years. 1 to 3 days. It is expensive because you have the account at a bank in a certain currency zone that needs to send money towards an account of another bank in another currency zone. You need to connect both ledgers, and that involves multiple intermediaries, correspondent banks. All the various accounts are in siloed databases. As you said, you need to connect them, you need to have these intermediaries, and all the payments also suffer from risk. Settlement risk. If you buy something, you have the payment which is not linked towards the actual transfer of a certain asset. So from that point of view, you have counterparty risks towards the buyer. And then reconciliation, we mentioned it already, you have those various ledgers that need to be connected towards each other, that faces reconciliation risks. We think that blockchain can solve this by having this shared ledger where all the accounts, where you not only have your payment means, but you have your tokenized assets, your identity, etc., are on the same ledger, are on accounts on the same ledger, which enables then peer-to-peer transactions, 24/7, while adding then an extra feature, which is called programmability. We can provide a stablecoin, but there are then industry parties that can build smart contracts on top of that to make certain transactions programmable, to enable transactions that are conditional towards certain events taking place. Next to that, the shared ledger, I already said, you have the transparency, you have the immutability, and you have the atomicity, which is possible by linking the execution of a transfer of an asset towards the execution of the payment, leading towards atomic settlement, leading towards reducing the payment or reducing the risk that you have on your counterparty. And then, okay, the reconciliation, because you're on one platform, the reconciliation errors going from 80% towards 1%, as Walmart showed, that is also a benefit of the blockchain. Now, we saw all those benefits, but we said that, think about, for example, e-commerce that started to flourish, etc. What was necessary for that was money on the internet. You can offer your goods on Web3, on the internet as Walmart or as Amazon, but you need to have a payment means to actually buy this. So 3 years ago, the bank said, okay, we need to provide the Web3 industry, the blockchain industry, with a trusted means of payment, which is not yet there. You have the ones of the fintechs like Circle, like Tether, US dollar-based, but you did not have trusted banks providing this. You did not have a euro payment leg there. And that was, with this mindset, we started our journey, thinking about, okay, the ECB, our central bank, is also providing certain payment means. But on the one hand, so I'm in the new technology group, investigating the issuance of a wholesale CBDC. That is only acceptable or accessible for banks to perform payments amongst each other. Corporates do not have access towards a wholesale CBDC. Last week, Piero Cipollone, he said, okay, the digital euro is going forward. Maybe we will issue it in 2030. A couple of caveats. The digital euro will not be on blockchain from 2030, so we will need to link again towards the existing payment networks. And there will be a cap of 3,000 euros, so corporates will not be able to use a digital euro for 5,000 euros, for millions of transactions that they will be performing. So then there were two possibilities. On the one hand, banks currently have their deposits. They could tokenize their deposits and they could put it on the blockchain. Couple of caveats. You have thousands of banks that each would need to put their deposit in a tokenized form on all the various blockchains that are there. You have a lot of public blockchains. You have the Camino network. All the banks would need to integrate to that and have their tokenized deposits there. So that would have a lot of integration efforts and a lot of coordination. Enter the stablecoin and enter our stablecoin, which various banks would jointly issue. You have one payment leg that everybody can use, and that can be integrated into the various blockchains that we see value in. Camino definitely one of that. It is, let me rephrase what Anke said. What is a stablecoin? It is backed one-on-one. You can compare it towards cash on chain. €1 is backed by high-quality liquid assets, by government bonds, by money which is sitting in a bank. So it's always one-on-one. It's not to be speculating. You will not see any Bitcoin graphs that go up and down. €1 stablecoin is €1. It is issued by one entity who has one balance sheet. There is no loans in there. There is no risky assets whatsoever. Only the assets that are backing it. Government bonds and money sitting at the bank. So, cash on chain, you can move it from one account at the blockchain towards another, peer-to-peer. And as such, it can be seen as highly efficient and scalable, and it is regulated because, as you mentioned, there is MiCAR already in Europe since 2024, who regulates e-money issuers to make sure that they're safe and that people can trust those parties. Now, is it new? As I already mentioned, Circle, Tether, PayPal, they have already issued a US dollar stablecoin, a lot of market cap, but Euro stablecoin was not there, so that's why we said let's issue our Euro stablecoin to add value to the market. And why we think that our Euro stablecoin is better than, for example, the one of Société Générale, of Quantos. There are already, since MiCAR existed, there are already a couple of Euro stablecoins, small in market cap, but we think that banks can add value because, on the one hand, we have experience in prudential management. We already provide payment means and financial solutions towards the industry for years, so we can be seen as trusted. No fragmentation, so we clearly thought that we did not want, as every bank, to issue our own stablecoin, because then you would have a Euro stablecoin from ING, Euro stablecoin from SAB, a Euro stablecoin from all different banks, backed by different balance sheets. What is the risk? The market needs a standard. The market needs €1 that you can use and that all the banks will use. Quick time to market, so as said, we set up the entity. Within 12 months, there is a regulation in place. We are already in contact with our regulator, the DNB in the Netherlands. We have been already in contact with the ECB, who is very supportive of this. Within 12, we can be live towards the market. But especially important is the adoption part, because all the banks that are shareholder, and it will not be limited towards those 9 banks. Currently, we have been reaching out since our reveal. We have been in contact with various other banks in France, across Europe, that say, okay, we also want to be part of this. The intention is to set up an entity which is backed by all the banks, that will not act as a supporter, but that also act as a distributor of the stablecoin. That if you as a corporate, you want to have access towards a stablecoin, then you just go to your bank, you want to swap your bank deposits into a stablecoin, and you can use it. The banks not only provide then the liquidity, but then also provide, and that is then another thing, a custody wallet. So if you have a wallet, if you have your blockchain address, there's a private key linked to that. The intention is that banks will safeguard that private key the way that they previously did with a safety deposit box, that you could go towards your bank and that you can have your key. We will safeguard your private key, we will provide you with a wallet, we will provide you with a blockchain account from which that you can do transactions. Next to also acting as market maker if you want to do FX. Because super important, we said the most important use cases are indeed cross-border. So we are in contact with likely consortia in Japan, in Korea, in Latin America, etc., across the globe, because we want to have then interoperability between our euro stablecoin and the stablecoins that other consortia, other banks are also issuing. Spoiler alert, the various banks, they have this mindset, they really want to develop all these products, but they will not be ready as of day one. Some of the banks already have these custody wallets, some of the banks already have the tools in place, not everybody. So we will be dependent on other regulated CASPs, so our stablecoin will be accessible, for example, on Bitpanda, on the exchanges which are already regulated and where we can receive that stablecoin. So we will be working with exchanges, we will be working with other CASPs, other kinds of banks, neobanks that have these kind of solutions already in place. From a use case perspective, for now, you know that stablecoins are mainly used in the crypto industry for crypto trading, to invest in DeFi solutions. Parties in Argentina, etc., that have high inflation, they also use stablecoins as a store of value, or it is used as remittances. We will offer our stablecoin for these kind of solutions as well, because you need to have liquidity in the market. You need to have a liquid euro stablecoin that you can then swap towards liquid other currency stablecoins. So we will definitely look at retail-driven use cases. We will also look at new markets, as Anke said, AI-driven things. If, for example, an AI bot is creating a new song based on existing songs, then the IP right owners of that song need to be remunerated. Via smart contracts, you can automate that process so that every IP right owner is getting remunerated for that. That you can settle real estate, that you can settle different kinds of real-world tokenized assets. The main thing that the banks are focusing on, obviously, is also to solve the inefficiencies in existing markets. As said, cross-border payments, programmable payments, FX trading, e-commerce, things that also happen on the Camino network. That is something that we really want to facilitate, enabling the industry to solve the inefficiencies that they're seeing. Now, 1.4 minutes left. From a timeline perspective, as mentioned, 3 years ago we started this with an initial exploration. We gathered the various European banks around the table with our vision. Various banks said, okay, we want to do this. Some banks said, okay, let's first explore. We started with 4 banks to explore this. We written a report saying that we validate desirability, viability, that this is feasible. We were in active discussions with the ECB, who was supportive of this. We've written the investment report. We were in contact with various banks. Okay, extra banks joined. Now we have the consortium, now we have the new entity with management in place to ask for a license, enabling us to go live in the second half of 2026, but to perform pilots previously. Pilots that we also want to do with the Camino network. Afterwards, we expand the use cases, we add distribution partners, and we add other use cases. So hopefully by 2027, all the various banks will also be offering all these wallets, etc. And we have the well-distributed network that we have in mind to service the industry as good as possible.